Let's bring in Mohamed El-Erian, Chief Economic Advisor at Allianz, and also Mary Lovely, Syracuse University Economics Professor and Peterson Institute Senior Fellow. Let me just, Professor, just hold on one second, please, if you would. Mohamed, remember long ago you had the scenario of what could happen from the trade deal. This is in the 60% that you talked about. Something, it's sort of an incremental, almost a truce, but something that can be signed and we can say something happened at least, right? Explain what you said the first time around.
So, correct, it's a truce, and it was the high probability outcome.
60% that we have something that was kind of okay, but not earth-shattering.
Right, and that number kept on going up over time. I think you've got to remember 2 points when you look at this. The first one is yet another constructive short-term factor for the markets, added to massive liquidity, added to good numbers out of China, added to the service sector holding up in Europe, and added to positive technicals. So that's good. But importantly, those who extrapolate this to mean a long, durable, comprehensive trade deal are wrong. The most likely next step is further tensions, and all we're getting here is in both sides' interest to just have a truce for the short term.
I think, Professor, you echo Mohamed's comments, I think, to some extent. At least we can say that this is a ceasefire, which is a positive for the markets.
Absolutely. It's like when you stop slapping yourself in the face.
Right.
Things are getting better. Hopefully we'll see a big pickup, hopefully, in business investment, which is crucial for, of course, the future. But there's also a lot of, as he said, a lot of concerns that are just a little bit farther out on the horizon.
The other things that are happening, the IP that we, it's kind of nebulous. It's almost a black box. That there's some things that were agreed to. What do you think that means? What is the actual? Is there meat on the bone for anything with IP or any of the intransigent issues that we were after?
Well, China has been working on these for a while. Not only IP protection and changing the way cases are settled or adjudicated within China, having an ability of firms to appeal to a higher authority, especially when they feel that their technology is being taken by local governments or government-affiliated firms. So that's already on the way. Another thing is, of course, the new foreign investment law that took place in January, which raised criminal penalties for stealing technology. So these things were in the works. Phase 2 is going to have much harder items, including industrial subsidies and broader market access for American companies, which I think is something that many companies are talking a lot about and really need. They need to get into the market to be able to play on a level playing field.
So when we step back look at this years from now, if we step back and look at this whole incident, will it be a positive in U.S. China relations or for the United States, do you think, Professor?
No, I think there's a couple of things. First of all, we still have tariffs on a lot of businesses. Small and medium enterprises in particular are suffering. They don't have the resources to hire high-powered firms to get the exclusions that they need. The world trading system has been hurt. The U.S. has officially said it's okay to have huge state-directed purchases to us. I mean, where are the Chinese going to put all these new farm goods and exports? It clearly means they have to sort of change where they're shopping. So that means that other countries are going to be cut out of these deals. And, the U.S. is the leader of the global rules-based system here, just sort of sold it down the pike.
Right. So we should not. Are you in the camp that we should have confronted China just differently or not confronted them at all?
I think we should have confronted them differently. This was just a brute force. We didn't think about where the key issues are, where are the key pressure points.
We didn't get anywhere for a long time. So, I mean, that's what I always hear. So I see which camp you're in. I'm just not sure I agree with it. Anyway, Mohamed, what do you think? Will this be looked back at as a positive?
I think it's going to be looked back as a ceasefire that was in the short-term domestic interest politically of both sides. It will not be viewed.
Should we have opened up this whole incident, this whole trade war?
Oh, yeah, you've heard me say from day one.
So
absolutely. Absolutely. Yeah. The only thing I would have done differently is bring Europe on and have a united front.
You can't get them to do anything for it.
I think Europe shares the same grievances. And it's interesting that overnight, China and Germany have seen an increase in that tension.
What happened in the last 20 years, Mohamed, trying to bring them on?
I think that the U.S. had an opening. I think where I differ with the professor, and it's an important one, I don't think it's going to lead to a pickup in business investment. I think that the uncertainty is still out there, and what we're going to see is simply a repositioning internally, politically, of both sides to get ready for the next phase of the trade tensions.
You know, Steve Bannon brought up an interesting point, something I hadn't considered before, just the idea that if USMCA passes, would that actually increase business investment here in North America?
I think so. I think what you're going to see over time is businesses focusing more on production in the U.S. and in North America. And to the extent that they're involved in China, you're going to hear this phrase over and over again, in China, for China. So yes, base yourself in China to meet the Chinese markets.
For selling there. Right?
Yeah, for selling there. Yeah. But this notion that you will base yourself there and feed the rest of the world, that is going to be increasingly questioned by business.